Hello students, welcome to the class on banking. Today our main focus will be to understand very simple concept of banking. So first of all we will see what is bank. As you all are familiar with the word that is bank. Bank is a financial institution that deals with loans, that deals in loans. So first of all what we will see that the bank word derived from the Italian word banco and which means a hill or mountain or bench. So what we can say that the bank which borrows money from one class of people to the and again lends money to the another class of people for interest or a profit generation. When the bank used to give some loans, when the bank used to give some loans for the farmers, industrialists, consumers, students, and many other sections of people which borrows money from the bank, such a business bring profit to the bank. Why bank are providing that? Because it is giving profit to the banks. Those who borrows from the bank have to return the principal to the bank along with the rate of interest. Therefore, Therefore, we can see that the bank is that which borrows money from one class of people and again lend money to the another class of people for interest or a profit generation. Now we will see, I hope you have understand what is bank. Now we will see the origin of banking. As we all know that the bank word it is derived from the German word Bankus and Banek, which means bench, which means bench. Jews were the early bankers, and the Babylonian developed banking system in 2000 BC. In the 14th century, royal exchanges did banking on behalf of kings. Then the goldsmith did the job of accepting money. Bank of England was started in 1694. 1708 Act provided the note issue power to them. And after that, in 1844 Act restricted power to the note issue by private banks. And we will see we have already know about that the bank the main origin of the bank it is according to the Geoffrey Crother. Who is the Geoffrey Crother? He is the monetary economics. He is the monetary economics. The businessmen, the gold merchants, and the money lenders are the ancestors of the bank. And therefore, in the Middle Age, when the Bank of the Venice was set up in Italy, the word bank, the word bank began to gain wide publicity as there was constant warfare among the city states and Italy. The states were in need of finance. To mobilize resources, the states appointed some commissioners. These commissioners were known as Monty. On that time, these commissioners were the where they used to appoint some ministers for there, and they are that commissioners. They are known as Monty. During those days, large areas of Italy were under the Germans. The Germans used the term Bank in place of Monty. In Italy, this word was Banco. In France, Banki, and in England, Bank. The first bank in our India, that is the Bank of Hindustan. And it was set up in 1770. As I think you have know that the first bank in Assam that was set up entirely on the local capital mobilization was the Guwahati Bank. This bank was set up in 1926. Now we will see the classification of banks. Generally, we can classify the bank into six types. That is the central bank, number one. Second, the commercial bank. Third, regional bank. Fourth, Industrial Development Bank of India. Fifth, Small Industrial Development Bank of India. And the sixth, that is the NABARD, National Bank for Agriculture and Rural Development. As we will see the different types of banks here, the main central bank of India, that is the Reserve Bank of India. As you all know, as you all are familiar, that what is the main function of the Reserve Bank of India. So, the central bank is the head of all the banks in the country. All the banks are to operate as per instruction issued by the central bank. Whatever the instruction, whatever the rules and regulation which are set up for the central bank, for the other banks, it will be, it have to be accepted by the other banks, and according to the rules and regulations only the other bank will go on lending their money and accepting whatever their functions. So the main functions of the central bank, that is the first bank in here in our India, that is the Reserve Bank of India. And this bank, the Reserve Bank of India, it was set up in 1935. So the central bank has some perform some functions. The first function we will see, that is the central bank issues currency, as we all know about that. This is the monopoly right of the central bank, as no other bank have that right. Therefore, the central bank only have the power to issue currency. The second term, that is the central bank, controls the volume of credit. How much money it will be given to the bank, it will be decided. It will be decided by the central bank. Therefore, the central bank controls the volume of credit, how much it is to be total money supply, it is to be constituted to the other bank. The quantity of credit money depends on the lending capacity of the commercial bank. The central bank adopts credit control measures to regulate the lending capacity of the commercial banks. So we have seen that the two functions of the central bank. After that, the third function, that is the central bank is the banker's bank. Central bank it is central banks, it is the banker's bank. The central bank examines the account of all the member banks. The central bank is also the friend in need to all other banks. Whenever the banks are in a financial crisis, it is the central bank that comes to their help. So the central bank is the banker's bank. Fourth, the central bank is the financier, advisor, and agent to the government. The central bank is the financier to the government. The government faces a budgetary deficit when the aggregate expenditure showed in the budget exceeds the to aggregate revenue to be earned by the government. This deficit is removed when the central bank prints new money and make it available to the central government. The central bank is the advisor to the government. The bank offers its own suggestions to the government to make the income policy, tax policy, trade policy, and the like more effective and realistic. The central bank is also the agent to the government. It maintains the accounts of income and expenditure of the government. The fifth point of the central bank is the custodian of the foreign exchange reserves of the country. Foreign exchange may flow into the country in many different ways, like export, earnings, foreign investment, and so on. The central bank fixes the official rate of exchange. Rate of exchange is the rate at which the currency of a country is exchanged against the currency of the another country. In a free enterprises economy, where the state central over the economy is the minimum, the rate of exchange is basically determined by the market forces of the demand for and the supply of the foreign currency. The central bank functions, the central bank functions as the clearing house for the member bank. There is interbanking lending and borrowing. The central maintains the accounts of all member banks. All transactions between the lending and borrowing banks are cleared at the central bank level. The seventh function of the central bank, that is the promotional role to play. It promotes socio-economic development as it releases funds to the priority sectors of the economy like agriculture in India. At present, priority sector lending in India has been fixed at 40% of the total deposits of the banks. Number 8 point, there are miscellaneous functions which is performed by the central bank. The bank reviews the economic situation of the country from time to time. It supplies loans to the cooperative bank and other banks. It operates welfare fund for the educational and social purposes and so on. The next function, we will see the function of the commercial bank. What are the main functions of the commercial bank? So before go through with this, we will see what is commercial bank. The bank which provides service to the public directly or indirectly by conducting activities related to savings, credit, trade, etc. under the direction of the central bank. Under the direction of the central bank. They are generally known as the commercial bank. Presently, the areas of activities of these banks are increasing day by day. The functions of the commercial banks are discussed below. As we all know that the commercial bank, what they used to do, they used to do that they used to keep apart from our income, we used to invest, we used to save some money. For that we have to open an account, that is the saving account, and this types of things we used to do in the bank. So the commercial bank, what they used to do, their activities, they're conducting some activities related to the savings, credit, trade, etc. So the commercial bank mobilize savings, they used to mobilize the saving, current saving or deposit, fixed saving or time deposit, and the third one, that is the saving deposit. Current saving or deposit may be withdrawn by the saver or depositor at any time. Fixed or time deposit cannot be withdrawn like current deposit. The depositor has to give prior to the intimation to the bank before he or she withdraws the savings. In case of saving deposit, a part can be withdrawn as when necessary, but the other part can be withdrawn only the bank permission. So the second point, that is the commercial bank offer loans. The commercial bank, they are offering loans to whom? The primary sector people, those who are engaging with the primary activities. And if they want a loan, they used to give loans for the short-term period. That is not for the long-term period. If that will be the long-term period, maybe the borrowers, they are not able to give them money with the rate of interest. With the small rate of interest, they used to provide the loans and all. Therefore, to whom they are giving that loans? The commercial bank, they whom they are giving that loans. The farmers, artisan, industrialists, telawalas, rickshaw pullers, and other receive that loans. And that is for the short-term period. That is not for the long-term period. If they are giving that for the long-term period, then it may be for the high risk. There, when the bank will not be in a position to release the savings to the depositor when he or she comes to withdraw money, people may lose confidence in the bank. Therefore, ultimately the bank may even fail or go on bankrupt. The third point, that is the commercial bank as a whole who can create credit money. As we have already learned about what is that credit money, on the basis of the primary or passive deposit, the bank can create derivative or active deposits. The savings deposit with the bank by a saver is the primary or passive deposit. It is the passive because it is the saver who takes the first step. The bank is passive. On the contrary, derivative or active deposit are created by the commercial bank. A part of the primary or passive deposit is written by the bank. The banks offer the other part as loans to the different sections of people in the society. The process of credit creation starts as soon as the bank begins to offer loans. So suppose, let us take one example. Let us take one example, that is suppose that A, the depositor, deposit rupees 1000 with the bank. This will be the primary or passive deposit. This will be the primary or passive deposit. Let us assume that 20% of this amount is kept by the bank and the rest is offered as loan. The amount of the loan, therefore, will be rupees 800. The bank gives 20% to enable it to meet the demands of the customer at any point of time. The bank cannot offer the entire rupees 1000 as loan. Now let us suppose that the individual who has taken the loan of rupees 800 from the bank pays the money to another individual who deposits the money with the another bank. The second bank similarly gives 20% of rupees 800 but itself and offer the rest, that is the rupees 640, as loan. For the second bank, rupees 800 will be the primary or passive deposit, and rupees 640 will be the derivative or the active deposit. Now rupees 640 is put into the third bank, out of which 20% is written by the bank and the rest is offered as loan. And so on. At the end of this process, the total amount of deposits will be rupees 5,000. Thus, on the basis of the primary or passive deposit rupees 1,000, initially the commercial bank have created rupees 5,000. This is 5 times of the original amount. This is the process of creation of credit by the commercial banks. The commercial bank also performs certain miscellaneous functions. Valuable ornaments, it means that whenever they are offering some loan, it means that the commercial bank, they will directly not going to give that loan. They will take something as your mortgage, maybe like LIC policy papers, some documentation, some valuable ornaments as a safe custodian to the lockers for the bank. And some of the bank also functions as the trustee of the property of the customer or the depositor. So these are the functions of the commercial bank. Now we will see the IDBI bank. The IDBI was set up in the year 1964. This bank has two primary functions: to offer financial assistance to the industries and to develop the institutions that are related to the industrial development of the country. The bank offers direct loan to the various industries. It also offers indirect loan from the industrial development. For example, the IDBI gives the IDBI gives financial assistance to the State Financial Corporation, Industrial Development Corporation, the commercial banks, and such other institutions. And in their turn, this institution offer loan to the various industries. Thus, the loan from the IDBI does not come directly to the industries, but through this institution. Another important functions of the IDBI is to offer industrial loans at concessional rate of interest to the industries in the backward regions of the country. Yet another function of the IDBI is to take the initiative in creating entrepreneurship through various training programs. So we have seen that the IDBI bank, they are offering some, they are for the industrial development. They are offering loans, they are giving that assistance to the industries, and they are developing themselves. And they are giving loans from the concessional rate of interest to the backward regions of the countries also. So the next function, that is the regional rural banks. Regional rural banks. 5 RRBs were set up in the first time in 1975. These banks perform two main functions: to provide loans at low rate of interest to the villagers and liberate them from the clutches to the private money lenders who charges extremely high rate of interest, and to mobilize rural savings and invest those in various productive activities. In 2014, the number of RRBs in India was 57. So we know that in the regional areas, there are some money lenders, those who used to pay money, but they are taking high amount of rate of interest from the um, rural peoples, those who are taking that loans from that money lenders. But when the banks are set up there, they are providing the loans at a low rate of interest to the villages, which is perfectly eligible for the agricultural farmers, the other persons, those who are taking that loans, the borrowers. It means that the borrowers. So they are able to give that amount with that small amount of rate of interest. They are able to pay, but the money lenders, those who are lending that money with charging with a high rate of interest, they are not able to pay that amount whole. Therefore, to for the betterment of the regional areas, they are providing this types of bank, that is the regional rural banks. The next part, that is the NABARD. NABARD was established in the year 1982. The main functions of the NABARD is that the NABARD is the apex financial institution among all the institutions related to the investment and the production in the rural areas. NABARD streamlines the process of offering loans. They used to monitor and evaluate the progress of various rural schemes and organizing training programs for the beneficiaries. These are the main functions of the NABARD. Now the next, that is the SIDBI. The SIDBI were set up in the 1989 and SIDBI started its operations from 1990. The main headquarters of the SIDBI is in the Lucknow. What SIDBI's function? What are the functions of the SIDBI? To promote modernization and application of improved technology in small industries, to create markets for the products of these small industries, to create more employment opportunities to the small industries in semi-urban areas, and check the migration of population from these areas to the towns and cities, and to offer financial assistance to the state financial corporation, industrial corporation, commercial banks, and cooperative banks and regional rural banks, so as to enable this institution to offer loans to the small industries. Now we will see that the NBFIs, non-banking financial institution. Like the bank, NBFIs also collect savings from the savers and advances the savings as loan to the various people. But there are two main differences between the bank and the NBFIs. So NBFIs, they are the non-banking financial institutions. They are also have they used to collect savings from the savers and advances loans. But before that, what they want, they must have to be registered with the Reserve Bank of India. Many NBFIs is not registered with the RBI. Therefore, they cheat the depositors as they suddenly vanish, leaving no trace of their existence. There are two main differences. There are two main differences. That is this how it is different from the bank. Bank, the first difference, that is the depositors can withdraw money from the bank through check, but the NBFIs depositors cannot do that. Secondly, in case of banks, there is a deposit insurance scheme to cover the risks of the depositor, but the NBFIs do not have such types of schemes to cover the risks of the depositor. Therefore, now, my dear students, I hope that you have all understood what is bank, origin of bank, classification and functions of banks. The money part already we have completed in the class, therefore I have not explained here. Hope it will be helpful for you. Thank you.